Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Kicking off a fresh new week, we are coming to you live from the CNBC-TV18 Motilal Oswal studios. Yesterday was a painful week. Can we expect a bit of a bounce is the question as we start this week. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, good morning.
Hi, morning.
Hi, morning. Well, the US market managed to bounce back on Friday, but not that we are entirely correlated. But yeah, given the huge drubbing that the bulls have had, maybe they'll hope for some respite, some relief today?
Well, that's right. You know, the markets will be hoping to put in some kind of a base or some kind of foundation. And talking about foundation, it's my son Neve, which means foundation. It's his birthday. So hopefully the bulls can put a little bit of a base in place. And Neve, happy birthday, Papa's promise.
Well, wish him a very happy birthday, Nigel.
Thank you so much.
Well, let's just take it from the top, right, in terms of what you need to know as we kick off a fresh new trading session. And I'll start with, of course, the backdrop, which has been losses and more losses and more losses. And the picture comes up on your screen. That's a a table. 3% Nifty, mid-cap index down 5, IT down 8, real estate down 6, and the pharma index down 5%. That's just 1 week. Look at 8% knock on the IT index, right? And it started slow. We were last Monday, this time, we were talking about the H1B stuff, which had come out over that weekend. It started slow that Monday. Tuesday was nothing. But then, of course, losses picked up. And we finally ended with an 8% cut. So it's been quite painful, frankly. Now, just to say this right off the bat, I think if you look at a variety of short-term indicators, as far as the market is concerned, we are looking oversold, extremely oversold, actually. And that is the reason. 6 days, the market's fallen. But simple things like the RSI, etc., very oversold. I mean, we're due for a bounce. But are we, when I say a bounce, do we mean a big sort of rip-roaring rally or anything? No, I mean, I think the range still remains, but maybe we go in the other direction for a bit. Hopefully today, we'll see. Of course, the focus squarely is on US-India trade talks. And I was sort of looking at headlines, anything which has been said by the US side over the weekend. So Howard Lutnick, US Commerce Secretary, I mean, he made the comment about both India and Brazil, and it said that India needs to play ball with the US. This was with regards to opening up markets and markets to US companies and, of course, other stuff, etc. as well. Nothing from our side. There was that statement which was issued after the Indian delegation led by Commerce Minister came back on Friday. That was last week. We put that out as well, saying, well, talks are progressing and they'll continue. But I think this is the big one, which we will have to see. There is, a lot of stuff happening this week, right? 1st of October, you've got the RBI meeting. We've got a market holiday. 2nd is a market holiday, which is a Thursday. So, Thursday holiday, Friday, we come back for one-day session and go into the weekend. So 1st of October, which is Wednesday, is the RBI meeting. Markets are expecting a dovish pause. But I think given the state of things here, which is the rupee, which is equities, which is foreign outflows, it'll be an interesting one in terms of action and, of course, the stance and, question and answers, etc. as well from the governor. On the 1st of October, so as I said, lots happening on that day, there is a very high chance that the US government, federal government shuts down unless a last-minute deal can take place. President Trump, of course, is meeting Democrats, etc., to try and avoid it. It's not new. I mean, over the years, we've seen this over and over again with very little impact as far as markets are concerned. If it does shuts down, some data, etc., gets pushed out, including jobs data, which is due for Friday. There is also the start of the Chinese, Golden Week from the 1st of October, which means that there won't be any onshore trading from the 1st to the 8th. So a relatively quieter period as far as China and data out of China, etc. is concerned. US continues to remain pretty solid. So US markets were down for 3 days. Friday, they sort of came back up again. S&P is up 14% in 2025 so far. And about 54% of it is driven by earnings, which have come through. I mean, the rest is multiple, some, equity market multiple, etc. By the way, US 10-year real rates, YTD, have fallen from 2.25 to 1.75%. I mean, this is a big reason why equity multiples have had space to expand in that sense. But even without that data, etc., hard data out of the US continues to be extremely strong. And I think that's just the way it is. And equity markets have responded. In India, just to come back and before I get to the levels, massive amount of primary issuance. The numbers may not be, especially this week, may not be all that large in terms of number of, the size of IPOs, but 22 IPOs opening over the next 1 week and 21 listing, many which closed last week. I mean, they're going to be listing. So more than a couple every day, pretty much, I assume, and we'll sort of cover many of them as we go along. So just to sort of tie in the levels here, as I said, maybe despite all of this, perhaps just for the fact that the markets are oversold on technical basis, we'll get a bit of a bounce. The market is decisively closed below the 61.8% retracement level, which means that the next support comes in at the old support zones, which is 24,400 to 24,330, which is the prior lows. 24,400 basically was the low. So that becomes a support level. For the Nifty Bank, it's broken key daily averages and the 61.8% retracement. Support here comes in at 53,561. So I'm just leaving you with supports here. I mean, on the way up, there are enough and more markers. But I think maybe, hopefully, fingers crossed, a bit of a bounce here. GIFT Nifty will give you a quick sense of how we start. We'll pick it up from there. 100 points higher. So we've got to build on it as we open up. Nigel is standing by. He's walked across to the F&O side of things with what the positioning is looking like. Nigel, over to you.
Well, Prashant, you know, that GIFT Nifty suggesting a 100-point gap up, that's something that's making me a little bit uncomfortable. I'll tell you why. Because it's giving the bears some kind of order to come in there and sell into the markets. I would have preferred actually a softer start. So holding on to these gains is going to be extremely important. And last week, no two ways about it. You had FI selling, you had some HNI panic, and you had leveraged positions as well that got sold out. And the structure on the market has got, damage. And the biggest negative actually has been the renewed FI selling. Because in last week, if you take a look at the sell number, it's much higher than what we saw earlier in September itself. So the average FI net sell number, that's what perked up. But however, there are a couple of factors that the bulls will clutch onto. One being the technical levels, whether you're looking at the PCR, the shorts in the system, and the RSI moving towards that oversold levels. So the hope is that we're reaching those stretch levels, and hopefully we see a bit of a bounce. And the next point is maybe some kind of NAV propping towards the half yearly close. That is, September 30th or so. So let's see whether or not that can provide some support, particularly to the broader market. It's going to be extremely important. What do the FIs do? Well, they added close to around 19,000 contracts. Short positioning moves up to around 86%. And in absolute terms, it moved to around 1.65 lakh contracts on the short side. So some shorts in the system, the bulls will be hoping to trap them on the wrong side, which hasn't happened till now. Now, remember, we have the monthly expiry that plays out tomorrow, and the rollover positioning comes up for you at around 48 and around 52% on the Nifty Bank as well as on the Nifty. So one factor is big shorts in the system. The second factor is the PCR has come down to around 0.63. This is the highest we have seen in more than a month or so. And normally at around 0.6, 0.65, you do see a technical factor that plays out and you do see a bit of a bounce. And that's happened because of the call writing. 24,800, 24,900 call. Extreme writing is what we're seeing on both those two strikes. While some glimmer of hope is that we saw some kind of writing at around the 24,600 odd mark, which brings us to the levels. The 50 DMA, that becomes your first reference point that you're looking at. So 24,850. That's the first level that could provide some kind of resistance. We'll keep an eye out on that. And the bulls will be hoping that this 24,500, 24,300 mark does hold out, because the last time around we bounced from this 24,300 odd mark. Pulling up the Nifty Bank, that was leading the way on the upside. That's given away some kind of, that's some of that advantage. So you have the 20 DMA, that becomes the first level of resistance. That's around 400 points away from current levels. So you'll want the Nifty Bank actually to get towards that mark. Well, on the downside, you don't want it to go to around 200 DMA. So that's the important mark that you're looking at. Moving to stocks that are in focus. Well, we told you in Friday's trading session itself, that RBL Bank, that could continue to stay into the F&O band. And that's actually outperformed the Nifty Bank. So this stock needs to be kept on your radar. The other one is Saman Capital. That's come out of the F&O band and we've given you a heads up itself. Also, towards the end of today, keep an eye out on the Nifty rebalancing. A couple of stocks will be in focus because of the flows, because that will be effective tomorrow. So today, we'll keep an eye out on Interglobe as well as Max. Both of them will be the stocks in focus because, both of them will be coming in. While the exclusions are Hero MotoCorp as well as IndusInd Bank. These are the exclusions. These are the inclusions. So we'll keep an eye out on all these names.
Okay, all right. We certainly will. Thanks for that, Nigel. Asian markets, by the way, are quite mixed. Some of the markets are seeing profit taking. Case in point would be Japan. But But then you've got the Chinese markets, particularly Hong Kong, which is doing quite okay. Almost a 1% rally going on the Hang Seng. So that's the picture across Asia. That's the implied open. So it's suggesting that we will get that rebound that bulls have been desperately seeking. Let's see if they can, sustain on this and then build on this as we get to our open. Well, let's get to the equity call of the morning. Rhythm Desai of Morgan Stanley expects earnings to beat in the next couple of quarters, the RBI to remain dovish, more reforms from the government and a likely trade deal with the US. He says the underperformance in 2025 so far makes a potential rally a significant pain trade for foreign investors. Okay, so Rhythm retains his bullish stance on India. Let's get to our first conversation then. Ed Yardeni, president at Yardeni Research, is with us. Mr. Yardeni, always a pleasure to have you in. I'll start with this whole business of the US government shutdown. Well, we've been at this point before, right? And it usually just passes over after a little bit of noise. You think it'll be more of the same, or could it be different this time?
I don't know. I don't think it's going to be different. We get this drama on a regular basis, and it passes. Sometimes the government does shut down for a couple of weeks, and sometimes that's avoided. My hunch is it'll be avoided. I don't think the Democrats want to be blamed for shutting down the government. They've got enough problems going on, so I suspect they'll fold.
On the data piece, Mr. Yardeni, what have you made of the latest prints? I mean, we saw the inflation numbers last week, end of last week, and pretty much in line with estimates, though now headline inflation is edging closer towards the 3% mark. The labor market data has been patchy. Jobless claims weren't that bad last week. Of course, we'll look out for the non-farm payrolls report on Friday. What do you make of the macros at this point?
Well, the macro data that's come out since the Federal Reserve met to vote to cut the federal funds rate by 25 basis points, all that data has shown that the economy is actually doing very well. Real GDP for the second quarter was revised up significantly from 3.3% to 3.8%. That was on Thursday of last week. And then on Friday of last week, the Atlanta Fed's tracking model is showing that real GDP is increasing at an annual rate of 3.9% in the fourth quarter. Initial claims came out on Thursday suggesting that layoffs remain extremely low. So, we've got GDP being revised up and the payroll employment numbers being revised down. That implies that productivity is absolutely stunning. And if that's the case, there really was no reason for the Fed to lower interest rates. The labor market's just got a lot of strange things going on with the supply, especially. Also, AI is having an impact. I don't think that the last rate cut was necessary, and I don't think there'll be another rate cut this year.
And, you mentioned AI. Good morning. Lots of questions around maybe some weeks that's a large number of questions. AI is entering some bubble zone or not, and some serious people are starting to talk about it. Seriously. But what did you make of that NVIDIA OpenAI deal, Ed? One paying the other to be able to sort of buy their GPUs, and does it remind you of instances in the past?
Yeah. There's a Prince song, party like it's 1999, and maybe it's going to be party like it's 2025, 2026. It certainly reminds one of the meltdown scenario we had with the tech bubble and then the tech wreck, 1999, and then a couple of years there into the 2000s. Artificial intelligence, AI, I should say, is artificial and it's not intelligent, but it's going to be very useful for certain applications, but it's not going to be the kind of game changer that people are talking about, in my humble opinion. And I think there is a certain amount of hype there. And it wouldn't be a bad thing if the AI stocks just kind of consolidate for a while everybody figures out whether they should be at these elevated evaluation levels. And meanwhile, they're not going to prosper unless they have technologies that really help other companies. The S&P 493, let's say, if we're comparing it to the Magnificent Seven, the S&P 493, I call them the impressive 493, and I think they need to show that they are using AI to increase their productivity. I think that's going to happen, but I think there's a little bit too much hype about this, and the kinds of monies that are being thrown around. I think the market is right to question whether there'll ever be any significant profits on the kind of investments that are being made.
Absolutely, and I think it's a big question of our times, right? And people on both sides, and we'll talk more about this. Ed, great speaking with you. A short conversation today. Appreciate you joining us here on CNBC-TV18. It's always a pleasure. We'll just quickly tell you what's lined up here in terms of interactions over the next 2.5 hours. So we have at 8:35 Ravi Menon of Macquarie Capital joining us to discuss the H-1B visa fee hike and key trends in the IT space. 9 o'clock. We'll have Harshit Kapadia, Vilara Securities, to talk about trends in the capital goods sector. 9:20, Pratik Gupta of Kotak will join us on markets. 9:35, Hindustan Copper Management talks to us about the, that big mine shut, right? Second largest copper mine going out of business for at least a quarter. Jairam Sampath of Keynes Technologies will be speaking with us at 9:45 on the board approving redesignation of Ramesh as MD as Executive Vice Chairman. And towards the end of the program, it's the economy. Lata talking about all issues concerning bonds and rupee with Kamaksha Trivedi of Goldman Sachs coming up.
Time to slip into a quick break. We've got a lot of stock-specific action to track for you on the other side. We get to that in just a bit, but for the time being, I give you a sneak peek. Tata Motors, IRFC, Lupin, Paradeep Phosphates, Rosario Biotech, Azad Engineering, PGE Electroplus. But on the flip side, HUL, HDFC Bank and Hickel will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. Well, gearing up for the start of a brand new week of trade, and cues across Asia have been mixed, we've been telling you. But if we look at the implied open, that is suggesting that the bulls will have some relief, at least some reprieve after last week's serious drubbing. So 100 points to begin with. Of course, individual stocks are going to be on the radar as well. So let's straight away get to the CNBC-TV18 list of top stocks to watch. Morning to all of you guys. Hormaz, let's start with Tata Motors. Tata Motors, I think, has managed to be on our top stocks list consistently all through last week. It opens this week as well. Some relief coming in from the UK government.
As you can hope for that. You can't take Tata Motors off your radar considering the news flow surrounding it. And now reports are suggesting that the British government is likely to back their JLR unit with £1.5 billion worth of loan guarantee. And that is to secure their supply chains, which has been impacted due to the ongoing cyber attack. And there have been reports that are suggesting that these small suppliers to JLR could run out of cash reserves by as early as next week. And that is why this loan guarantee becomes very important. And this loan will be financed and guaranteed by the British credit unit, which is the UK Export Finance. Now, JLR has 3 factories in the UK. It produces close to around 1,000 cars there and every day, and it supports majority of the jobs in Birmingham, which is the second biggest city over there. But the lack of clarity here is still there because the production shutdown, which is there till the 1st of October, whether it will resume after that or not, that remains the big clarity to watch out for. There is no clarity forthcoming on that front. And of course, Tata Motors as a stock bucked the trend on Friday in a market like that. It was one of the few nifty gainers yesterday. I expect some green in today's session as well.
Okay, all right. Thanks a lot for that, Hormuz. Let's hop across to Mangalam, who's back fresh from a holiday. Nice and relaxed, Mangalam. Spend some time with BV, that you'll do in the office also, as well as with Bacha. So, welcome back.
Thank you, Nigel. Yes, relaxed, and hopefully there will be a comeback from the Bulls as well after what took place all of last week. I was tracking it from the holiday, but be that as it may, I'm looking at HUL this morning because the company has given their second quarter update. They've said that they expect their consolidated business growth to be flat or near low single digit. And remember, this is something that all the FMCG companies told us during the GST conversations that we had with them as well, that there would be a transitory impact on trade and channel due to the GST reduction. The old stock has to be cleared, the new stock has to hit the markets, all of that. In fact, I wouldn't have gone with a red on HUL until the company actually said this as well. And this is where we may see a bit more protruded decline. That is, they expect the impact to continue in October as well. And they expect recovery only starting November. So the transitory impact that there was, because it may continue into October, which includes both Dussehra and Diwali, may have the street a little more worried than it should be. The decline, however, would be shallow. The stock has anyway corrected a wee bit from the highs, so opens in the red. Let's see whether with the mood of the market, it sees some recovery or not.
Okay, all right. Got that, Manglam. Thanks very much. So HUL on our radar. Let's get to Gaurav. He's watching out for HDFC Bank and also, I think, IRFC. Gaurav, morning.
Well, yes, for HDFC Bank, a small speed bump is what we can call, because their international transaction and the branch has been impacted. Now, Dubai Financial Service Authority, that has barred HDFC Bank's Dubai branch from onboarding new customers until further notice. And the reasons they have given is that the DIFC branch, which is Dubai branch, they are carrying out financial services by arranging financial products to customers who are not onboarded by DIFC branch. And there are also some issues that they found with the onboarding process in the DIFC branch. So definitely on the back of that, bank says that the impact is not going to be material, because they have only got around 1,500 customers in the branch, whereas the total branch, I mean the customer count is around 9.8 crores. So definitely impact is minimal but sentimentally negative. On the other hand, when we talk about IRFC, they have sanctioned 3 loans worth 20,000 crores in this over the weekend itself. They have given loan worth 12,600 crores to CSPGCL. They have given loan worth 4,000 crores to Talcare Fertilizers, and lastly they have also extended their loan facility to around 3,300 crores to PVUNL. So definitely a positive news flow here, given that they have given 20,000 loan, sanctioned 20,000 loans. Remember, they have around 4.5 lakh crores worth of loan book as of first quarter of FY26.
All right, thanks very much for that, Gaurav. Lupin is the next one. We're going to focus on. Vinny's here with details. Vinny, morning.
Hi, good morning. So Lupin, we're expecting a positive move here after the wholly owned subsidiary of the company in Netherlands has acquired Vizu Pharma, which is a Netherlands company. They're mainly focusing on ophthalmology. So it's a positive acquisition that has come in for the company, given that they can further expand in the European markets. Vizu Pharma, they've acquired this for around 190 million euros. When you look at it, it's around 12-13 times the EBITDA, so that's a positive there. The company is also highlighting that this is expected to be accretive in terms of overall the growth as well as the margin profile for the company. They'll be funding this through their existing cash on the balance sheet as well. Vizu Pharma, as of 2025, the expected revenue is expected to be around 54 million euros for 2025. 2024, the revenue was at around 48 million euros. So expected the CAGR growth is in the last 10 years is around 8%. Now it's expected to grow at 13% going forward. So interesting one for the company, giving them a further leg up in the European region as well as in the portfolio as well.
Okay, all right. Thanks a lot for that, Vinny. Well, let's hop across to Sonal as well, who obviously was on that holiday as well with Manglam. Sonal, welcome back. Tell us what are the stocks you're tracking.
Thank you for that, Nigel. Well, I have 3 stocks on my radar. Let me start with Hikal. There has been a negative update there. Their facility at Bengaluru was inspected by the US FDA back in February. They earlier got observations under Form 483. And now there has been a Form 483 that has been issued to the company. It was issued back in August and they have reported to the exchanges now. They also talk about the possibility of some revenues getting impacted of this. They will get deferred. And that is why this is a negative update which is coming by for this company. Paradeep Phosphate, because there is a commissioning of a plant, 1,500 metric tons per day of sulfuric acid plants at its Paradeep plant in Odisha. Rosari Biotech, they had spoken about capacity expansion in previous conversations as well. And now they are saying this has finally been commissioned, the H facility with an additional capacity of 20,000 metric tons per annum. With this commissioning, the total installed capacity comes in into 1,52,500. Their material subsidiary, Unitop, which is an acquisition earlier, has also commissioned 15,000 metric ton per annum of ethoxylation capacity out of the total plant capacity.
Okay, all right. Thanks very much, Sonal, for that. Vamakshi is coming in as well. Azad Engineering, some positive news flow. PG Electroplast as well. Vamakshi, morning.
Good morning, Prashant. Let me first start off with Azad Engineering. This stock will be in focus because they've gone ahead and signed a long-time agreement with Mitsubishi Heavy Industries, which is based in Japan. Now, keep in mind that this is phase 2 of the contract. The first one was signed back in November 2024, and this contract is for the supply of highly engineered and complex rotating and stationary airfoils. Now, the contract is valued at approximately 651 crores, and this contract, along with the phase 1 of the contract, it has a combined value of almost 1,386 47 crores. So significant contract for Azad Engineering, resultantly going with the green for this counter. And take a look at PG Electroplast as well, because its arm PG Technoplast has acquired a 50-acre land parcel in Andhra Pradesh. This is in Sri City. Now, this is expected to be their first manufacturing facility in South India. They're putting up a capex of around 1,000 crores over the next 5 years. And the first phase of this capex, which includes 1.2 million refrigerator capacity, will be operational by 2026 of December. Now, site will also be designed to accommodate expansion into other products like air conditioners, washing machines, as well as some other home appliances. Bodes well for the company, green for this counter as well.
Okay, all right, got it. Vamakshi, thank you very much for that. So let's quickly recap our list of stocks to watch. The ones that have positive news flow would be Tata Motors, IRFC, Lupin, Paradeep Phosphates, Rosari Biotech, Azad Engineering and PG Electroplast. Stocks with negative news flow would be Hindustan Unilever, HDFC Bank and Hikal. Okay, so that's a stock list for the morning. Let's also find out what's the latest in the world of commodities. We have Manisha joining in for a roundup of the action. Manisha, good morning.
Morning, and thank you for that. I'll start with the crude oil prices, where we posted the best weekly gain, by the way, in 3 months. But after that, there's a bit of a profit taking coming in right now. That is because Iraq's Kurdistan resumes crude exports after 2.5-year halt. You also are looking at OPEC likely to approve another output hike in its October meeting, which is this weekend. And then the markets also are looking at the risks to Russian supply and focus of those continued Ukraine strikes on its energy infrastructure. But what has continued to do very well has been precious metals yet again. Silver is now surging above $46 an ounce. It's $4 away from its all-time highs. Indian markets, in the meanwhile, are trading at an all-time high. We have seen September as perhaps one of the best months in many years that it has been. And with that, we are trading at 1,42,000 rupees a kg when it comes to silver prices there. Gold, couple of dollars away from its all-time highs of 3,791. Markets are looking at support continuing on the back of concerns when it comes to tariffs, the U.S. shutdown concerns, as well as we are still looking at those numbers or that meeting that the street will look for in sense of refinancing that debt, even if it's until by mid-November, is what really seems to be supporting. Also, when you look at the gold prices, this is the best annual performance that you've seen in gold, with that 45% gain since 1979. The inflows into gold in the previous month have been at record numbers. The tariff uncertainty on pharma, medical equipment also seems to be supportive. And then the central banks' buying numbers for the month of September are expected to be very, very positive, supporting both of these precious metals even today.
All right, Manisha, thank you very much for that. And, commodities, of course, always got to keep an eye out on what's happening there. Brokerage calls of the day, and Nimesh is joining in with exactly that. What's making the cut? Nimesh, good morning.
Hi, Mani Prashant. A couple of brokerage notes one should take a note on in today's market. The first one is L&T. The entire street got excited on Friday because of that Hyderabad Metro settlement. But today, BofA Securities has downgraded the stock to an underperform from buy, and they have a target price of 3,700. The underperformance is large. The downgrade is largely because they believe that the recent outperformance has limited the potential upside from here on. In fact, remember, the stock is up 10% in the last 2 months. Yes, Hyderabad Metro exit is earnings and ROE accretive. BofA has upgraded the earnings for FY26 and FY28 by 3 to 4%. However, going forward, the ROE expansion will depend on the buyback. They have $2.8 billion of cash and further improvement in margins and working capital, which looks tough in the current environment. The key risk, according to the BofA note on L&T, is the slowdown in the domestic capex as well as lower crude. So a big downgrade on L&T. The second stock is IndusInd Bank. On the valuation front, given now the stock is trading below one-time book, Morgan Stanley yesterday upgraded the stock to an equal weight from underweight, and they were target price of 785. They believe that now with the CEO on board, there is enough clarity on the management bandwidth as well. And Morgan has kept the ROA targets for FY27, FY28 intact at close to 1% for FY28 versus just 0.3% for FY26. So an upgrade, a small upgrade on IndusInd Bank. And the last stock is Ethos. It's a cash stock. I understand there is a bit of delivery-based buying as well of late, but MK has written a note, and they believe it's the best proxy play on the luxury demand growth. They expect further expansion going forward. All the roadblocks seems to be taken care of at these levels. They see 600 basis points RSUI improvement over the next 2 years from here on, and at valuations at 40 times on FY27, it's attractive. So Three notes: one upgrade on IndusInd Bank, a downgrade on L&T, and a note on Ethos from MK.
Okay, all right, got it. Thanks for that, Nimesh. So we're going to keep all of those stocks on our radar as well. Need to take a quick break. On the other side, we'll be connecting with Dharmesh Kant of Chola Securities for some fundamental stock talk. Also, Ravi Menon of Macquarie Capital will join as the US has hiked the H-1B annual fee. We discuss the implications.
Welcome back. You're tuned in to Bazaar Morning Call. You're on CNBC-TV18. Well, we have Dharmesh Kant, Head Research at Chola Securities, who joins us on the show. Hi, Dharmesh. Good morning. Hope you had a rocking weekend. Well, back to work today. Tell us, what's your take on pharma companies? You know, that bit of a scare that came in on a Friday morning from Mr. Trump, who says that, branded sales in the United States that are imported will attract a 100% tariff. Most of the Indian exports are generics, but yet the index pulled back to such a large extent, giving you a sense about how sentiment is. What is your approach to these pharma names, and do you believe there's an opportunity that's emerging?
Yeah, good morning, Nigel. Thanks for having me on the show. And definitely yesterday evening was quite rocking with India clinching the title and that to in a style. So when I hope the market responds to your color of the jacket, that is green. As far as pharma companies are concerned, I think, see, if you look at Mr. Trump, he is just circling in rather than circling out or getting things negotiated mutually or bilaterally. So what he's trying to do is he's trying to create pressure from whatever direction he can and put more pressure on India to and accept the demands. I think after the Bihar elections are over, we can see some deal coming through. But as far as pharma companies are concerned, I think it's a void as of now. Let the things be more clearer. We see, more trouble coming into the space, going by the way things are happening out there. And therefore, we are not trying to, nibble into this kind of a correction in the market. Though there are many quality stocks which do offer a good valuation bargain buys out there. But let's wait it out for 1.5 months. I think it will be more of sluggish, volatile. You can have a trade, spike up trades playing out, but we are not looking for spike up trades as of now. It's better to avoid that rather than to jump the gun in.
Got it, Dharmesh. Hi, morning. Let's talk about these FMCG names. It's not a very promising start. I mean, what Lever is saying, flat to low single-digit growth in this quarter. How will you read it through? I mean, will the market look through some of this? Because the real benefit of GST will perhaps kick in once all the packages have been repriced and the new MRP product packs are out. So what do you expect specifically for FMCG in this quarter? How are you playing the sector, and a call on Lever itself?
Yeah, good morning, Sobe. I mean, if you recall our conversations earlier, we were very clear on the FMCG space, particularly the consumer goods space where the likes of HUL, ITC and all. We did not expect, good traction coming immediately, which Lever has reiterated. And going forward also, I think the consumption on the base level, it will be muted. It will be a mid-single digit kind of a volume growth with price not going up and the GST has to be passed on. Eventually, as the macroeconomics, thesis suggests that it has to play out in favor of a broader economy. But what are the, economies which are likely to, benefit from this? We think it will be more on a consumer durable space rather than, fast-moving consumer goods. And there we think automobiles still stand a better chance compared to the likes of HUL. So, I mean, be it HUL, Britannia, Nestle and all, it will be a tough Q3 as well for them. And going forward, we'll see how things are panning out. Valuations are not cheap at all, but they used to trade at such kind of valuation multiples just because of the cash flows and the ROEs which they enjoy. But I think this is a market which is now becoming very constructive for a structural buy. Because if you look at it, equity risk premium, it's almost at a 10-year low. 1.41 is 1 year forward equity risk premium. And compared to bond yield, as of now, it's only a 1.65 basis point kind of a differential, which is now. So, I mean, earnings are quite attractive. We should be looking for growth opportunities. And there, I think where government is a consumer, you should be buying them. And the plays are very simple. It's defense, infra, railway infra, and to an extent, banks and NBFCs.
The IT, Dharmesh, hi, morning. The IT index sold off some 8% last week, right? Stocks were down anything between 8 and 12%. Large caps, mid caps. Coforge was down 14%. Anything interesting there after the fall?
Yeah, good morning, Prashant. I mean, yes, there are interesting names out there. The very fact that Coforge and Persistent System had a very good correction. And these are the companies which are not directly a product company. They are more of a software services provider to a product company, essentially based in US. I think these companies are likely to benefit, but let's see, as I said earlier, that Mr. Trump is circling in rather than, giving it a space. And who knows? I mean, if you want to tax, he's still beating around the bush to my mind. If you want to tax, you can just have a single layout that anything, any revenue generating in US, where the execution is enabled offshore can be taxed in US at certain like surcharge or cess, something like that. But he has not done that as of now. We think, Prashant, the very problem is such kind of a scenario brings uncertainty and undecisiveness both among the service provider as well as the buyer of the products in US. Even they are confused whether to give a deal to an Indian company or not. And this ensures the shorter deal wins. So deal wins period will be shorter and you will have not a very clear vision as to the future profitability. So
No, absolutely.
Absolutely.
This is something we discussed with Happiest Minds, Dharmesh, last week itself, that whether it'll elongate just deal closure cycles. Because you have to now discuss who's paying for the upfront cost, how much on-site, offshore. I mean, there's too much uncertainty around, offshoring at this point in time. In fact, let's take this conversation forward. This is exactly what we're going to be discussing with Ravi Menon, IT services analyst at Macquarie Capital. So much going on with the Indian IT services landscape. There is, of course, this H-1B visa, the 1 lakh USD fee that's been levied. And Accenture sounded a little, shall I say, muted with respect to their guidance last week as well. Ravi, great to have you in. Before we talk about any of this, actually, I want to start with the Hire Act because that's the next thing. Now, I don't know. I mean, are you assigning any probability of that becoming a reality, that companies that offshore work, they will be taxed at 25%? I don't know if you've even started modeling the impact of this, because this could be far more significant than H-1B, won't it?
See, this affects every single corporate in the US, right? And there is no distinction between whether they do it out of their GCC or whether they do it through a service provider. So I would think that affects entire corporate America, right? And you have even small supermarket chains who actually send work, and even they have GCCs now in India. So I think it's, since it treats all firms equally, I don't think this is something that we should really worry about. Seems unlikely. I mean, on one hand, you have tax cuts, and on the other hand, have a tax increase like this. I don't think that actually makes sense. So I wouldn't really worry about this, and there is no point in, I think, assigning a number to it, because there is not going to be a revenue impact or a margin impact from that, because it affects clients even if they do it themselves. The only question is there an alternative to doing work out of India? And so I think it's pretty much no. In fact, people who try to do it out of Eastern Europe, you're now seeing those or Latin America. Those companies now, you have them scaling up here, and India is their fastest growing delivery location.
Ravi, hi, morning. Let's drill it down to your coverage universe, Ravi. Where are pockets of value now? Or is it still very, very hazy and unclear ahead?
No, I think that definitely we are very much in value territory. I think that we've had a growth slowdown that I don't think anyone expected to last as long as it did. We still have probably a couple of quarters to go before things start picking up, but I'm more hopeful about next year's budget cycle. There will still be some verticals where I think the heightened uncertainty of tariffs makes it difficult for them to embark on significant spending, like manufacturing, retail, even healthcare to some extent, because there is a lot of regulatory uncertainty. But BFSI, high tech, these are picking up. So I think next year definitely looks like a better year. And evaluations are, I think, a lot of good value we had. I mean, last time we had HCL Tech, for example, trading at 5% free cash flow. In the next 12, 18 months, we saw the stock deliver more than 100%. We are at more than 5% right now. So I think that's very attractive. TCS again, now more than 4.5% dividend yield, very attractive in my mind. We're expecting significant margin expansion and an acceleration revenue growth for TCS to drive a re-rating over the next 12 months. That's our top pick for now, TCS. That's a Macquarie marquee buy. And among the mid caps, we like Persistent Systems and LTTS.
Right. Hi, Ravi. Good to see you in. And in fact, you're sounding a little bit optimistic actually on the space turning around. That cash flow yield is something that actually is supporting it. But I don't know, on a weekly basis, some sort of negative news comes in. My colleague Rima joins in and tells us about that. But you're sounding a little bit optimistic. That said, I think TCS is one of the top buys, right? As you briefly said. But they're not able to get to that band, that margin band. I think 26, 28% is what they're talking about. When do you think they get to that mark? And also, AI in the near term could be a bit of a challenge. There'll be a lot of investment going in there. It could be deflationary in nature as well. So comment on that. TCS getting to that band and the impact of AI on a company like TCS.
So first of all, I would say that I'm an AI optimist, I would say. I think of that as definitely revenue accretive. I think that it'll be margin neutral. There are companies like LTTS, for example, which actually believes that it'll be margin accretive as well, because they think they have a lot of AI-based platforms. They're going to change how they bill for revenue. I think that it unlocks actually a whole new opportunity of legacy rewrite. I mean, earlier it was very expensive and risky to undertake that. Now, and very difficult to make a business case, right? You're going to replace a system, an old system, with a new system written in new technology, but works exactly just like the old one. Very difficult to actually fund that, especially when it involves, multiple years of effort and a lot of money. Now that rewrite effort's gone down, the risk of the rewrite's also gone down. TCS last year showcased a framework that I called future-proof legacy modernization. I think that was pretty powerful. They showed a lot of investments actually in AI last year, and that's when I upgraded that to be my top pick. We've seen them declare a rewrite project of mainframe with one of the North American banks a couple of months back. So you see that press release. So I think that that's a big opportunity that we're just starting to see the early signs of.
Yeah. Ravi, just very quickly, since you mentioned that you are expecting some pickup in spends, by when will it show up? And say for your big large cap pick TCS, just trying to understand what is the kind of volume growth, or say top line growth, that you would work with over FY27 perhaps?
So FY27, I think we would still be only like a 6 to 8% sort of range. It won't be going to a double digit. I think at the size of TCS anyway, it's actually very difficult to get a double digit unless the market's, firing on all cylinders, right? I mean, demand on for all the sectors improves. And I think by FY27, we will still not see that. Perhaps FY28, we could see that. So I'm going back to Nigel's question of 26% margin. I think towards the end of FY27, we're likely to see that them return to 26% margin. Because I think the restructuring they're undertaking now, that will fund the wage hike for this year. But beyond that, I think margin improvement still seems difficult without revenue growth. So next year, when we have the revenue growth of at least 6%, 7%, I think that's when we can see margins expand.
Okay. All right. Good conversation, Ravi. Thank you very much. Helpful perspective there. You have a good day. Well, that's a view from a Macquarie coming in on IT services. Not all gloom and doom. They're expecting some turnaround in the coming quarters. We'll take a break on that note. On the other side, we'll have Sudarshan Sukhani and Mitesh Thakkar join in for some technical perspective.
Welcome back. The Ministry of Petroleum and Natural Gas argued for higher valuations for PSU oil and gas companies. My colleague Sonal is here with more details. This was, of course, Mr. Puri, who was in Mumbai, with a bunch of investors. There was media there as well. Sonal, tell us.
Well, yes, very interesting comments coming in from the ministry. They are pitching for higher valuations to come by for oil marketing companies. Remember, PSUs, especially the oil and gas space, always have lower valuations because of a lot of government risk, so to say. They highlighted government support, profitability, and focus on operational excellence as well. Did indicate that, yes, there would be some time in terms of investor confidence. That is the brokerage view as well. Diesel crack gains will lower excise duty risk going forward as well. For JP Morgan, the preference is BPCL, then IOCL and HPCL. For Morgan Stanley, they say that they highlighted focus on improving market capitalization of energy companies. They are focusing a lot on capex, value unlocking as well, and they also reaffirmed stable energy pricing policy, which is very important. In terms of windfall taxes, they are saying no future windfall taxes will come in play, irrespective of what the oil prices are and what kind of gains these companies are seeing. They are focusing on strong IRRs for the entire universe as well. They're also talking about management pay, which should be around 15% linked to shareholder returns besides profitability, so as to motivate better shareholder returns to come by as well. Broader energy imports from US are beyond LNG and crude, according to them, and India's crude sourcing is focused on efficiency and economics. This is, of course, related to Russian crude imports. They're saying there are potential new discoveries that they're looking at in Andaman Sea, as oil recently announced as well. Jeffrey says that value unlocking could be prioritized from here on. In the past, we've seen a lot of it not going through as planned by the government. Government also has a plan for asking for sticky pump prices even when there are volatile markets going forward. Jeffrey says this implies periods of supernormal marketing margins in terms of profits or marketing losses depending on crude price volatility. But yes, some interesting comments coming in on how they're focusing on better market capitalization for all these companies.
Okay, all right. Thanks a lot for that, Sonal. Not a sector for the faint-hearted. Dharmesh, you want to comment on this? There is a push for better valuations. You know, it's a very, very tricky space to be in. We've seen in the past, you don't know what the government's going to do next. You don't know what the global scenario, how the global scenario is going to pan out. But what's your take?
Yeah, it's definitely a very tricky scenario, and it's a plea from the government to give them a better valuation, which definitely on the replacement cost basis is there. But given the macro way the things are evolving, at one side the government itself says that by 27 every vehicle to be sold on the street should be electric vehicles. So seeing that, putting that into context, so where do you see a volume growth coming for all these oil refinery companies? So more or less, it's as of now for next few years, maybe for 1 decade, they may be consistent on their profitability, but growth is what is a suspect out there, and they are a sunset sector to my mind with all this renewable energy push coming through. So I mean, it's a cyclical trades which one can enter into, but structural growth story for next 10 years, I don't see them coming there. So it's a void for us completely.
Okay, Dharmesh, good views there. We'll take a quick break. Have to do that. We're going to come back with a pre-open session. Sudarshan and Mitesh are going to be with us on technical trading ideas. We'll also connect with Harshad Kapadia of Elara Securities to discuss trends as far as capital goods go. Stay tuned. Coming up.
Welcome back. Just about 15 minutes to go. We are approaching 9 a.m. So good time to get in some technical advice. We have Sudarshan Sukhani as well as Mitesh Thakkar joining in. Gentlemen, good morning. Great to have you in. What a drubbing the Bulls got last week. They're hoping for some relief this morning, if you look at what the GIFT Nifty has been doing. Mitesh, trades on the Nifty. Anything at all?
Good morning, Subi. So I think you were right. Last week was a slightly stronger surprise on the downside, and I'm not sure it's ended. I think, the entire week, the market kind of continued to decline. We had a gap down on Friday, and there was no attempt to fill that gap. And I think the earlier lows, which were, made in mid and late August, I think 24,400, 24,315 zones come into focus. I think that should be the next target area. What can obviously happen is a kind of a pullback for a day or two. But as long as we are not getting past 24,850, 900, I think the directional bias will be slightly on the negative side.
Okay, so need to be a little cautious. Sudarshan, morning. Let's get your thoughts in as well on the Nifty. Will you play for a pullback or a rebound at all?
Yeah, good morning. Yes, I would. For the last week, for 4 days, my suggestion was stay away, don't do anything in the Nifty. And that seemed sensible because the markets kept on falling. And it's not easy to take short positions anyway. But today is a different day. There are two things that have happened. First, the Nifty is very close to a significant support level at 24,500. Now, should be anybody's guess. That support can break. Obviously, we can't forecast that. But it's at a support level where the buying idea is justified. And secondly, we have a mild gap up. That's a good thing to happen after many days. So I would suggest keep 24,500 as your stop loss. Look to buy the Nifty not at the open, not at a gap up, but at any minor dip that goes by. Keep it a short-term trade. Don't expect that a new bull market is starting. Just look for some gains. That's all.
Okay. All right. Let's also talk about individual stocks. Mitesh, what would your strategy be with stocks?
I have a mix of buys and sells. On the buying side is L&T. The stock was buzzing in a weak market, made a fresh swing high on the closing basis. So getting past 3690, 3700 was the important point for the stock. So buy here with a stop below 3685. 3820, 30 should be the target area. Also buy on HPCL. Last 3 days have been the price has given a mild pullback now, close to the 10-day average. So buy here with a stop at 416 for targets of 435. And two stocks on the selling side. The first one is a sell on Biocon, which had a gap down break on Friday. So sell here with a stop at 345 for a target of 324 and 361. That's broken the support levels of around 1020. So keep a stop about that 1020, 223, and look for a target of around 960.
Okay, all right, gentlemen, got that. Thanks very much for giving us some perspective. We'll come back to a little closer to market opening for some final ideas. Sudarshan, sorry, beg your pardon. We didn't get to your stocks. So index you've mentioned. What about the stock list?
Well, it's also mixed. So IBL Bank is a buy with a stop under 266. It's been a relative outperformer, and we are Indians. We are always having courage. So Infosys is a buy with a stop under 1400. I have two intraday shorts. JSW Energy is an intraday short with a stop above 531. And RVNL, Rail Vikas Nigam, is an intraday short with a stop above 346. I would focus on the buys today.
Okay, all right. So focusing on the buys, and you're saying we're always bullish. We're Indians, so we like to look out for perhaps bigger moves. Got it. Thanks very much for that. Let's now get to that conversation on capital goods. There's been some chatter in the market whether the government's focus has now shifted to consumption, whether that means that it will no longer be as focused on capex as it has been in the past. Well, let's discuss this and more with Harshit Kapadia, Vice President, Consumer, Electrical Durables and Electronics at Elara Securities. Harshit, of course, tracks consumer durables, electronics, and also defense. So it's really a theme up your alley, Harshit. Where do you stand on the debate? The government, actually, to be fair, even in the interview to us, to Network 18, the finance minister said that there'll be no sort of shortfall on the promised capex targets for this year. But there still seems to be some thought around this, that the government has made a pivot from capex to consumer. Your thoughts, and should investors be worried when it comes to capex or industrial stocks?
Morning. Absolutely, you're right. There has been a stance change of government from capex to consumption, given the GST rate cut, etc., other steps which the government has taken. But we don't think capex is going to drill down, or it's going to be reduced. Maybe the growth rate may be a little bit coming down, but we don't think the absolute capex which the government is looking to spend across the public infrastructure sector is going to come down. Especially if you look at subsectors like defense, is something where the capex is going to probably see among the highest increase. Even the defense secretary in one of the media interviews has mentioned this, that they are looking at around 17-18% growth. The overall capex may be, coming at around 10 to 12% is what we expect.
Absolutely, and this entire transmission sector is where bulk of this is going to land.
Yes, so power is one of the biggest theme which is happening in the capex segment, and we see this continuation happening till 2030. And with this, the power equipment segment and the transmission, that is transmission and distribution segment, would continue to see the most amount of growth for all the type of products, from low voltage equipments to high voltage and even HVDC equipment.
You know, there are these headline stocks, right, which of course have done very well. You know, there's a lot of focus there, Harshit. But are there smaller companies, lesser, like for example, there's a company which is into repairs when stuff goes wrong. I mean, you know, that's what they do. That's all they do. But it's a play on this on the core theme of T&D. I mean, should one broaden the gaze beyond what is, of course, I mean, Hitachi, etc., well discovered, right? And a lot in the price.
Yes, I think that's what people are looking out beyond, because most of these big names, whether it is MNC or whether it is domestic companies, have reached a very fair valuation. So there is not much upside left for these names. Hence, people are scouting out for where growth is there, given this power theme is growing. So people are looking at small and mid cap ideas in this particular field.
You want to run us through anything you have under coverage there in that segment?
So within this, what we have, probably not under coverage, but something that we have been keeping and tracking of, one is Quality Power. There is Elecon Engineering is another name. Apar Industries is something that we like within these subsectors. Azad Engineering is something which we like because it has both the dual themes of power as well as defense. So wherever there are two sectors where all things are growing, we'll see among the highest growth.
In terms of valuations, Harshit, I'm guessing these newer names or the smaller names that you mentioned, they perhaps offered more valuation comfort. But even otherwise, the biggies, your Thermaxes, ABB, and Schneider, etc. Just run us through the risk-reward valuation versus your expected upsides, and where investors perhaps would be better placed.
So among the MNCs, we still believe that Siemens India would still our preferred pick in this particular space. Valuations have come up from its heights, now trading somewhere around 40 times. Similarly, ABB is also there, but we think ABB will have a longer time because we don't expect margins to come back to a normalized level. That's where we think probably after second half, we'll have more clarity on the margins and stability. So I'll be a little bit worried on ABB, but not so much on Siemens India, given mobility is going to be a bigger game there. We also like Thermax and Cummins India among these cap good names. Thermax more on a longer term trajectory, Cummins on a short to medium term trajectory because the genset market is still growing in a very strong double digit is what we believe.
Harshit, finally, we've discussed power, and I think in the market as well, when we talk to a lot of experts, that there's no consensus on the fact that power, and especially T&D within power, is looking like a relatively good space to be in. Apart from that, since you are not negative on the capex theme overall, apart from power and power equipment, anything else to look out for?
So we were also looking at water-based projects as well, where we saw that there has been some awarding which has happened, and there has been government stance, especially on the state government side, who has been issues were there with the payment side has been softening. So that was something that we were looking into. Beyond that, we are looking at cables and wires, which is still a continuing theme, which is among the strongest theme apart from power.
Okay, I think we'll leave it there. Harshit, good speaking with you. Appreciate you joining us and, running us through a bunch of those ideas. So, not under active coverage, but Harshit did mention, especially on the power side, a bunch of names where, which he likes, valuation-wise, perhaps a little more reasonable and longer runways in that sense. 9-10 calls. I think Sudarshan and Mitesh are with us. Sudarshan, what do you have?
I have Infosys, Infi, which is a buy with a stop under 1400.
Infi. Mitesh, what about you?
I'll go with a buy on Hindustan Petroleum. Buy here with a target of around 434, 435.
Okay, HP is the call from Mitesh, Infi is the call as far as Sudarshan goes. I think we're at the end of the pre-open session, so maybe it makes sense to take a quick look at where stocks are landing with regards to news flow, right? I mean, Tata Motors will come up. It's up about 1.6%. So, some relief, some backing from the government there for JLR. HUL, second quarter business update, stocks on your screen about 0.6, 0.7% lower. Some regulatory curbs, HDFC Bank, nothing very much. There's IRFC in focus, 3 loan agreements, 1%. Lupin, Hikal, Paradeep Phosphates, etc. are some of the other names which are coming through. There's also Rosari Biotech, Azad Engineering, I think has got a bit more in terms of traction. It's up 4%, and PG Electroplus is up about 1.5% as well at this point in time. Let's just look at the Nifty, Bank Nifty as well. So a quick look and then we'll move forward. 70 points higher, 24,730. And I think with the Nifty Bank, which is up about 71 odd points or so as well. Well, let's just focus back on the pharma space where there's a fair bit of news flow. Vinny is standing by with the spotlight on it. Vinny, good morning again.
Hi, good morning. So yes, we're keeping an eye out on the Nifty Pharma and overall Pharma pack. Now, do not forget, last week we'd seen the fall coming in, 5% fall last week for the Nifty Pharma. YTD also, there is a fall of around 8 to 10%. And why? Because of the uncertainty that is going on around the tariff. Now, the key triggers that we have are the announcements that came in over the weekend. One, obviously clarification that countries existing with trade deals with the US are exempt from the pharma tariffs, or that 100% which they've spoken about. So that's the clarification. So the deal of US and EU, that is a 15% tariff on pharma, right? So that is still in existence. Now that means that is a positive for Sun Pharma. They have a branded specialty portfolio that makes up to around 19% of their total sales, so some bit of that respite for them. Now, other than that, most favored nations, that's an update that's coming over there, or we are waiting out for this week in terms of for these most favored nations, what is the tariff over there. China also said that it will remove 30% import duty on Indian pharma products, though we do not have much exposure in terms of export to China, but still, at least sentimentally, that is going to be positive as well. Now, Morgan Stanley has written a note on this. They said the EU-made drug exports to US could continue to attract only 15% tariff. Obviously, the most favored nations update is going to be key to watch out for. And China, which has reduced the 30% import duty for Indian pharma, is incrementally positive, though China is not highly competitive in terms for the export market for Indian companies, and they have their own generic players as well, though that will be positive for Dr. Reddy's given it has a larger EM share or China share as well.
Okay, all right. Got it, Vinny. Thanks very much for that. Getting back to Nimesh. Nimesh, which is the name that you're watching out for?
Hi, Surabhi. So the stock that I'm focusing is L&T. Well, the street got excited on Friday on that Hyderabad Metro settlement, but BofA today has downgraded the stock to an underperform from buy, and they were target price of 3,700. BofA believes that after the recent outperformance, there is a very limited potential upside from current levels. Remember, the stock is up 10% in the last 2 months. Yes, Hyderabad Metro exit is ROE and earnings accretive. They've upgraded the earnings by 3 to 4% for FY26 to FY28. However, further ROE expansion will depend on the buyback. They're sitting on $2.6 billion of cash, as well as improvement in margins and working capital, which looks tough according to the BofA analyst. Now, the key downside risk for the stock would be the domestic capex is losing steam, as well as lower crude prices. So these are the two risks. But given the recent outperformance, BofA is today downgraded the stock to underperform with a target price of 3,700.
Okay, all right, Ramesh, thanks a lot for that. So that's the stock in focus, L&T Tech, L&T. Well, keep an eye out on Vascon. They have signed a 5-year MOU with Adani Infra as an execution partner for selected projects. So because of that big name, tie up with the big name, that stock is up close to 7%. It's been a relative underperformer, but they are saying that 3 projects totaling 13.15 million square feet in Mumbai have been identified. So that explains why that stock is up. It was lower in Friday's trading session. It's been an underperformer, but this announcement came post-market hours, and that's why that's one of the big gainers today.
I think we are just hitting market open, and we'll just sort of stay with prices, look at where we land as far as 9:15 market opening goes, and we'll pick it up from there. 70 points higher is where the Nifty ended in the pre-open session, and the Nifty Bank ending with, okay, I think we're just kicking off. First rate starting to come through. What do we have? 50 points, 24,700 on the Nifty. The sensex is coming up with a small amount of gain, about 1/3% basically. The Nifty Bank is up 0.12. Small caps and mid caps, I think a little better. 0.4, 0.5% of the mid cap and the small cap indices is what you have. So across the board, you've got Eternal, BEL, Tata Motors, Dr. Reddy's, Mahindra & Mahindra, which are the big gainers. And on the downside, you've got Lever, L&T, Sun, which are coming up with some amount of cuts. So 7 or 8 names are lower and the rest are higher at this point in time. So 24,710 is where the Nifty sits now. Surabhi.
Okay, 60 points or rather 50, 55 points higher. Let's look at the winners. Eternal, BEL, Tata Motors, thanks to some relief coming through from the UK government for JLR. There's it's very assortment of stocks actually. Cipla, there is Shriram Finance, Geo Financial. So there are no clear sectoral trends. Just a bunch of stocks that are moving higher. The Bank Nifty is very, very flat at this point in time. On the lower side, it's the FMCG pack, consumer and FMCG. HUL's guidance, or rather their outlook for the current quarter, flat to low single digits growth. That's kind of spooked sentiment out there. So Lever itself is down 1.5%. The others would be Asian Paints, Nestle. These are some of the names on the downside. HDFC Bank as well. The Dubai action. It's not material. The bank itself has said it's not material at all for the P&L. But there's some red on HDFC Bank as well. Overall, the Nifty is now beginning to drift a little bit on the lower side. 30 points up. Nigel.
Well, a few stocks actually that deserve special mention. Suntech Realty, they've launched an ultra luxury project worth 20,000 crores of GDV under its new brand, Immense. And they are talking about, I think, 2.5 lakh rupees per square foot. So, there are 2 projects that have been identified. One is the Nepean Sea Road project that's got pushed back quite a few times, and the Dubai project as well. So, Street has taken heart from that. That one has bounced back. Another one is Religare. I'm not sure what's gone on there, but the stock has opened up, gap up on large volumes. So, that in fact had gone to around 300 rupees, then it corrected. Actually, now it's cooled off. In pre-open, it was up. So, that one's not really reacting. Tejas Networks. I think let's pull that one up. Yeah, that one, in fact, is still holding with gains. Another stock that's corrected from more than 1,200 rupees to 600 rupees. And initial volumes are quite large on that name. So that's why that stock is up and about in today's trading session. Saman Capital, we highlighted that. It's expected to come out of the F&O ban. That's what has happened, post Friday's close. And Saman Capital is a stock that's actually up close to 4.5%, one of the top volume movers. And the other one is Vascon, with that tie-up that we have seen with Adani Infra. We'll have to see how the execution goes out. But for the time being, gap up 10% higher on that particular name because 13.15 million square feet in Mumbai have been identified for design and execution. So that's why, in fact, that's flying away.
Lots of stuff, right? Right out of the gates, 1,200 higher and about 1,120 stocks are lower right now. Put up, if you can, the Silver Bees. Silver Bees, 4% pop on Silver Bees, the ETF. So 138, 139, I don't know if you have it, we should pull it up. But large amount of volumes coming through as well right now. Okay, Tata Investment Corp is the number 1 volume-led gainer. It's up about 3.5%. Saman, I think we mentioned, back at about 144 or so. Tejas Networks is a bombed-out name and 5% higher this morning, 617, 618. Walcott, we had the management with us late last week, 2.5% there. So Walcott sold off hard, right, on Friday. And it's seeing some amount of recovery, which is coming through. Aavas Financiers, Reddington, Suntech. Suntech is up about 7% as well. So it's even Stevens. It's too early to look at market breadth and make any conclusions. But for now, it's about 1:1 in terms of what is up and what is down at this stage. Lemon Tree is coming up with a 2.5% cut. Yatharth Hospitals, Intellect, some of the stuff which is selling off as well. GK Energy is down about 3% or so. And of course, the number 1 volume-led loser is HUL, which is coming through. Not very much left, by the way, on the Nifty. 25 points, but this is still within the first, 5 minutes of market opening that we are tracking. Well, Pratik Gupta is CEO and co-head at Kotak Institutional Equities. He's with us now to talk markets. Pratik, great to have you back on the program. Thanks very much for your time. So last week, about a 3% cut on the index and selling continues. Rupees closer to 90 than we've ever been. What will cause a bit of a turn here, or Will it just be markets overextended, which gives us occasional bounces, or anything durable is still not really visible in that sense, Prateek? I mean, in terms of a turn for the better.
Good morning, Prashant. I think overall, as we mentioned and discussed the last time as well, we believe the market is still in a sort of range-bound zone. I was using the phrase liquid oxygen the last time, but basically, we've got expensive valuations still, although the valuations have become less expensive, but they still are still quite expensive. Earnings growth this year is still quite weak. We're expecting at Kotak about 8 to 9% earnings growth for the Nifty this year. But in terms of your question as to what could change things, first and foremost, obviously, is the uncertainty about the trade deal with the US and the extra 25% tariff which is out there. If you get some clarity on that, that could definitely help. But I think the bigger fundamental reason would also be the earnings outlook, which this year has been quite weak. But in FY27, at Kotak, we're projecting about 17% earnings growth for the Nifty. And this is fairly broad-based. A lot of sectors are going through a very weak sort of earnings outlook right now, whether it's the banks, the consumer, the IT companies. So most of these sectors should start recovering and showing better growth next year, apart from other sectors as well. So that coupled with, I guess, also India has been a massive underperformer versus most other emerging markets. Just to give you some numbers, the MSCI EM index is up some 24% year to date from January till now, and India is actually down slightly. So therefore, to that extent, most global investors are also sort of uninterested in the market right now. Hopefully, as we see perhaps a little bit more time correction or a little bit of price correction, we could see the foreign flows coming back in as well. And as I said, the clarification or the removal of the uncertainty around the trade deal and better earnings outlook next year, these two should be the main drivers of the market going forward.
Hi, Prateek. Yes, we remember liquid oxygen. How can we ever forget? But when you say the drivers for the next move, then what are we talking about? What kind of market are we now entering? Say, very soon it'll be Diwali, so we talk about the next Samvat. Then is it going to be a headline level ranged market in best case? You keep looking at individual stocks, or do you think that if that trade deal gets signed, then there could be sort of a stampede to rush back in? This FPI exodus could perhaps turn into a reverse stampede inside. And then it could be that high momentum market that we've all seen in the past.
So as far as the trade deal is concerned, we think the removal of the extra 25% tariff is largely priced in. I mean, most folks we speak to are anyway expecting that to go away. And also, if you look at the market behavior from the time it was first announced, we haven't really come off that much. So that in itself may not be enough. That'll be a mild positive, but not enough to move the market meaningfully. I think the change would come only if we really have something happening on the baseline tariff of 25%. If that comes down to a more attractive level of somewhere in the 15 to 20% range, that could make things a lot more attractive. Second is India is also in the process of signing trade deals with Europe and with other countries. So if that progresses in the next few months, that could help our export engine going as well. But and I think the other point is, as of now, there's still a little bit of skepticism around the consumer side recovery. While yes, everyone's expecting festive season recovery helped by the GST rate cuts and the income tax cuts and the RBI rate cuts, etc. But let's see how the season pans out, the October to December quarter. So if that is really indeed very good, then we could break out of the range. Otherwise, I think, unfortunately, we are going to be stuck in this range for some more time until we see very clear signs of strong demand recovery locally, and the valuations have also corrected a bit more.
Hi, Prateek. Good morning and good to see you. When the problem is the markets get a little bit stable, or even an ounce of buoyancy, you see these big IPOs hitting on, and a lot of fund managers were struggling to make it for some of these IPO meetings because there are so many. And then, in fact, the focus on the secondary market goes down a little bit. Do you think this is becoming a bit of a challenge? Supply of paper, we've got a couple of $1 billion IPOs that are coming up in October itself. Some are cheering it. I'm a little fearful. That's sucking out the liquidity.
Well, firstly, yes, we are seeing a lot of interest in IPOs, but that's keep in mind they're still largely being driven by the local institutions, both mutual funds, insurance companies, retail, and HNI. The foreign investor participation in IPOs, most IPOs, is relatively limited. It's come off quite substantially compared to a few years ago. Second, I would say while the IPOs do act as a drag on the market and they're sort of a headwind for the market to go up, but bear in mind the IPOs will happen only when there's strong investor interest and there's a reasonable pricing out there. So the IPOs in itself cannot prevent the market from going up. If you start getting good earnings, if the trade-related positives come through, if you start seeing very strong festive demand, then I think we'll have both IPOs happening and the market going up. The supply of paper in itself is not necessarily something which will cap the market forever. So that's definitely a headwind for the time being, and that's another reason why we're saying in the short term, given that we don't have a breakout story as yet, we will sort of stay range bound for the time being.
Got that. Pratik, across and you got the research team, when you speak to them, right, in the respective sectors, is there any feedback to how these GST cuts have been, what's the pickup across segments? Is there a sense, any sense? Some will start to report these pre-quarter numbers, monthly numbers, etc. So we'll get a sense. But anything you can tell us?
Well, firstly, the September quarter in itself is trending to be a lot weaker than I think what people would have expected back at the end of the June quarter. So you could see a modest round of earnings downgrades for the year as a whole, although obviously there's hope that FY27 will be a lot better. So that's point number one. As far as the GST cuts are concerned, it's still a bit too early, but the initial responses, the auto sector is seeing some pickup. Staples, also there's been some little bit of a pickup, but it's more the low ticket discretionary items where we'll see some uptake, but it's just been barely a week. So still too early to say. We'll find out more in the next 15-20 days, I guess.
Pratik, slightly maybe off tangent, let me ask you this. Obviously, this market is hungry for ideas on tech, right? New tech, basically. Now, whether it's EVs, whether it's semiconductors, and we only have a handful of stocks to play over here. We'll be speaking to one of the companies, Keynes, in just a bit from now. And then you have, on the EV side and the solar side, you have a couple of, solar cell manufacturers as well. Now, when it comes to new age technology, there's Mostip. I mean, and look at how some of these smaller stocks have done. I think Mostip is trading at some 200 times price to earnings, just because there is such scarcity. So what would your advice be to investors? Because these are very fanciful themes. Everyone wants to have their hand in the pie. But could it be, getting a little tricky now?
Yes, that's definitely a concern right now. In fact, just to step back for a minute, one of the reasons for the low foreign investor interest in India is there's a perception, or in fact, it's probably a reality that India has not really kept up with the AI boom that's going on globally. It's really the US and China, to some extent, TSMC in Taiwan. India doesn't really have a big AI play. A lot of these companies are very small, both for global investors as well as for our large domestic institutional investors. So which is why you're having some of these stocks trading at very, very expensive valuations. And honestly, it's still too early to see whether these will play out. This is also true of the US, by the way. This is not unique to India, but India even more so, because we're not the original large language models or the direct plays over here. So here there's a lot of hype. Our advice would indeed be careful. These are sort of concept plays, carry a lot of risk. So leave it to the institutional investors or the experts who know these stocks, who can figure out the valuation, take some risks, but they are not for the average investor in our view. Most of these stocks are trading at fairly expensive valuations.
Point taken. Anantraj, by the way, is up about 3.5%. This is another one of those names which has done phenomenally well. I think it was $500 10 days back, at about 700 now. Not even 10 sessions, so that's gone up like a rocket. Walkhard is up about 4%. 361 is up about 3.5 odd percent or so. So a fair bit in focus. NetWeb, by the way, is now the biggest volume-led loser. So that's another one of those names which we've been talking about. It's done very, very well. 30%, by the way, this year, NetWeb, after a phenomenal 2024. So that's where we are at. Prateek, what else? Any other interesting themes? Any other ideas? Any other, just what you are focusing on? Any IPOs which you think are going to be interesting ones up ahead? Some 20 IPOs opening this week, smaller ones, and then there are bigger ones as well.
So I think as far as ideas are concerned, what our view is, this is a tough economic environment, a slow-growing environment. You've got the trade-related uncertainty. One still doesn't know how it'll pan out and how much longer it'll take. Valuations are not necessarily in your favor. We've become less expensive, but we're still expensive. The Nifty is trading at about slightly over 20 times 1 year forward, still at a 45% premium to the MSCI EM index. So we're still not a cheap market. So therefore, continue to tread with caution, look for those opportunities. Fundamentally, what we are saying is, A, stick to large caps versus small and mid caps in general. There are obviously exceptions, but generally, and in fact, you'll see last couple of weeks, whenever we've seen very heavy FII selling, it's the small and mid caps which have come off even more. This happened last week as well. So one general trend we would say is stick to large caps versus small mid caps, at least for the time being, until we have clarity that we are past this hump of slow economic growth. And second is, look at sectors where valuations are still somewhat in your favor, or where you have very strong earnings visibility. So valuations in your favor, that would really be, frankly, just the banks, the large private banks, some of the large PSU banks, some of the NBFCs, which will benefit from falling funding costs. So that's one category, or insurance, life insurance in particular. Or go back to the smaller sectors like, hotels or airlines, or the hospital plays, the diagnostic plays. Those are the sort of industries we still like in this sort of an environment where, the underlying demand is still strong. And last theme would be, given the global uncertainty, given the likely trade-related slowdown globally, stay away from globally oriented companies, whether it's the IT services companies, we've been cautious in that segment for a while, or the export-oriented pharmaceutical companies, or the auto ancillaries which are exporting. So keep your portfolio a lot more domestic focused. We don't think it's time yet to go back into a global-oriented portfolio.
Okay. All right, Prateek, good conversation. Thank you so much for joining in, and we'll keep all of these points in mind. You have a great day, and we'll connect again soon. Well, a quick glance back at the screen. Let's figure out what the Nifty is doing. It's kind of stabilized, and now it's about a 60-point up move, so not bad. The lows are seeing some buying. No such luck for Hindustan Unilever, by the way. The stock's now down 2.5%. After the kind of guidance the company has given out for the quarter. In fact, let's bring Mangalam back in. Mangalam, everyone was hoping for, that bumper move to start in FMCG, but maybe not this quarter?
Well, maybe not this quarter. And in fact, that was something that the street was already anticipating, because the second quarter was expected to be a bit of a washout. We spoke to the management of a lot of the consumer companies as well. They said a couple of reasons. One, there is the GST transition that happens, and most companies, remember, it's the last few days of the quarter where excess sales happen. So this time around, because of the transition happening from September 22nd, those sales are taken out, and there are trade-related disruptions, which will make the way for newer MRP, lower MRP stocks to hit the streets very, very soon. But there was that temporary disruption that was expected. The second part was there was also heavy rains in large parts of the country, which were flooded. So there too, demand was impacted. The reason why the stock is lower in today's trading session is because despite them, giving an expected second quarter update, what they said was that they expect a recovery only starting in November. And this weakness may continue into October as well. And from an FMCG standpoint, October is very important because it has both Dussehra as well as Diwali. So a lot of the festive season buying that takes place, if that stands to get disrupted because of this, maybe, the most important month of the year will have some sort of growth problems. Even though there is recovery from November, and there are a lot of positive triggers for HUL in terms of new leadership and the underlying improvement in consumer sentiment, beauty and wellness doing well, the fact that October would be impacted has the street a little more worried than it should be, and which explains why the stock is the top Nifty loser today.
Okay, all right, Mangalam, thanks a lot for that. Well, let's turn our attention to the metal space. And to help us out with the outlook on copper, we have Mr. Sanjeev Kumar Singh, the Chairman and Managing Director at Hindustan Copper, who joins us on the show. Hi, sir. Thanks a lot for joining in. Well, coming to you in just a bit. For the time being, just highlighting to our viewers the three big points we're going to focus on. One is the closure of the Grasberg mine in Indonesia. How will copper demand-supply dynamics play out? Point number two, the outlook on copper prices and how much is the sensitivity of the company's EBITDA to global copper prices. And finally, the scale-up of the copper capacity. They are talking about scaling up by 3 times in the coming years. To help us out with all those answers, we have with us Mr. Singh, who joins us on the show. Good morning, sir. Thanks a lot for joining in. Well, your shareholders are thumping the table. They believe their time has come. One of the biggest outperformers in this month itself. Now, let's understand a couple of facts, sir. Given the closure of the Grasberg mine in Indonesia, how do you see the copper demand-supply dynamics playing out? If you could help us out with that. Will that be a crunch, say, till 2027 odd? And also, what does this mean in terms of a pricing outlook? Please go ahead, sir.
A very good morning to you and all the investors who are watching this channel. The first question which you asked about the Grasberg mine, definitely it is one of the biggest mines across the globe. And the supplies have been affected because of that incident, that failures. And it will continue for this year as well as for the coming next year, as we have seen from the news. Thing is that since this is one of the biggest mines, so definitely the supplies will be unconstrained. And across the globe, there are other disturbances also which will make the copper supplies in a tight position. So definitely in the coming 25, 26, the copper prices will remain quite tight.
Okay, all right. You want to give us a number, sir? Last time you told us you expect copper prices to remain in this range. From there, the prices have gone up by nearly 5% or more. So give us a broad band, sir.
It's very difficult because, see, this is a very unforeseen incident which has taken place at that big mine. So these things I can't predict. But since the demand is quite high across, I told you in the last interview that the biggest user of copper has become the AI's data centers. So the demand is increasing. So this demand will push the prices. Rather, it will hold the prices, I should say.
Okay, got it. All right. Could you give us a few more details? What are the selling terms on copper? How much of your copper is sold on spot? Is it a quarterly contract, a half-yearly contract? Is it an annual contract? Could you break that sales mix for us? And also give us a sensitivity analysis. Your EBITDA, how much of it is linked to global prices? Or if you could give us what is the cost per ton that you mine of copper?
See, as far as our saleable product, that is MIC, which we call metal in concentrate, is all on spot. And this is an annual tender. We float the annual tender and it's supplied on the annual basis. So it is completely on annual basis, nothing on quarter or 6 months basis. And secondly, the EBITDA margins, which you had asked last time also, and I had assured you that we'll try to keep and maintain that EBITDA margins, keeping our operational efficiencies and expenses in control.
Okay, got that. But now, sir, what is the cost per ton? If you could tell us, for a company like yours, because now with the prices moving up, your cost in all probability will stay similar, but your EBITDA per ton actually will move up. So you could give us a ballpark number, $5,000 per ton, $4,000, $6,000 per ton, because various costs, like employee costs and other costs, will not really go up, right? And that's how the operating leverage will play out. So give us a brief number, sir, on that front. Cost per ton.
Yeah, number one, our cost is quite competitive if you compare across all the producers of the world. And it will remain in the range of, say, 5,000 to 6,000. It will not go up. Definitely it will not go up because, as you have rightly said, things are in our control. So it will be in the range of $5,000 to $6,000 per ton. You can say it will be around $5,500 per ton.
Okay, got it. So in that case, sir, can your margins do even better? 40% you've managed to scale it up to. You've been in that vicinity, late 30s, early 40%. But if copper prices have moved up, do you think that there is possibly a surprise around the corner? Your investors are hoping for that. Can you scale margins by 100, 200 basis points? Point number one. And your volume guidance, you stick to that 15, 20% volume guidance, or do you want to up that as well?
No, so number one, if the prices remain as it is, as you have mentioned, definitely our revenues will go up, no doubt about it, because these are the external factors which are helping us. And as far as volumes are concerned, definitely we'll try to maintain. I told you 4 million tons plus will be the ore, and 30,000 ton plus will try to produce this MIC, that copper concentrate. The only negative factor which is with us is the monsoon, the advanced monsoon, and the monsoon which is still continuing even in the month of September, and which we have expect to continue in the month of October also. But we'll try our best to maintain the production levels in the third and fourth quarter.
Got it. All right. And there could be a positive surprise on margins, right?
Margins, because see, these are the external factors. It's not in my hands. Okay. The prices have.
The monsoon is done now, sir. Operating leverage will play out. You have better prices as well. So the street will be hoping for that. At least we have got one number out, that $5,500 per ton roughly is the cost of production. So we can work approximately with that. Also, yeah, what about, sir, the other big talking point is you're going to be increasing capacity from 4 million tons to around 12 million tons. Yes. By FY31. How much of this incremental ore production will start coming on? For this year, you're seeing 4 million tons. On a year-to-year basis, how does it move up?
See, in the last 2 years, that is 29-30 and 30-30, you'll see the maximum growth because all the infrastructure will be there and all those mines which are being reopened will start giving the results. In the last time also, I had mentioned the mines which were closed for, say, 2001 July and all that. They have started, they have been reopened in the last week, and another mine will be reopened in the coming month, that is October. So they will start giving the results from the next year onwards. So from 26, 27, 27, 28, you will see a substantial jump in the production of ore and subsequently the MIC also.
Okay, all right. Just a quick question, sir. Have you heard from the divestment department? At one point of time, Hindustan Copper was a candidate. Now, with copper being the new gold, you know, as most on the street are saying and most global commodity analysts are talking about it, do you think the government could be looking at taking some money off the table, maybe do an OFS, possibly divest the company on the whole? Is that a possibility? Valuations are not cheap, sir, from a stock market perspective. But the street is optimistic on the way ahead. So do you think you've got that phone call to say that probably there could be something on the cards?
Nigel, I don't have any information on this. Only thing I can substantiate it, there's a government of India and all the respective state governments, whether it is Jharkhand, Madhya Pradesh or Rajasthan or Chhattisgarh, they are supporting us like anything. So with this government support from the center and state, we are moving ahead. I don't have any information of the divestment.
Okay, all right. You know, besides that, you'll have the tailwind as well. And something that the market likes is you'll are communicating with part of the street as well. You know, otherwise, you don't get too much information on Hindustan Copper. We are happy to have you on the challenge. And in fact, the sell side as well has been interactive with you also. That's good news. Let's talk about another aspect. 2,000 crores of capex, right, is what you've laid out for the next few years. All will be from internal accruals?
Yes. We have. It will be from internal accruals, and we have already, from the board also, we have got the approvals of the QIP and even the bonds also. We have already taken the approvals from the board. In fact, I mentioned in the last interview.
Yes.
So there is no issue about this. And we are maintaining a proper debt equity ratio also.
Okay. Possible then we hear about a QIP soon?
No, not QIP. We don't need for that. We already have an approvals for that, I mean to say.
It's just an enabling resolution. It's just an enabling resolution, sir. You have just taken the approvals. You may or may not tap the market.
Yeah. We may or may not.
All right. Final question, sir. Before we let you go, you know, from a stock market perspective, ye dil mange more, right? They want to know what else besides copper. And you all have been talking about the rare earth mineral opportunity as well.
Yes.
Could you tell us what is the progress on that front? You know, by when do we actually start? Because now there'll be some capex that will have to be spent. You'll have to get allotted a block as well. By when? How do you see this panning out? What is the progress on this front?
See, exactly, we can't mention the time frame, but you must have noticed that we have got an MOUs with all big companies. The last one was with Oil India. And in that Oil India, we are very particular about the two mines, which is one is in the Arunachal Pradesh, that graphite and vanadium, and the other one is the potash in Rajasthan. And since we have the expertise of hard rock mining, we are the one of the hard rock miners of this country. We have already joined hands. A team has been framed at Hindustan Copper, which will be visiting very soon, and we'll be taking up that mining operations on a jointly basis with Oil India. So that is one start of that. The others, we are already started participating in the auction process. You must have heard about it. And all these MOUs, whether it is with Coal India or Indian Oil, GAIL or RITES, our partners are already interacting with our nodal team, which is here, and they are doing the due diligence internally also. And we have already started. You must have seen in rare earth projects also, we had bidded, and in continuation to that, we'll be moving ahead. In fact, we have about the blocks of in Chhattisgarh also, which are we have got the approvals of the NMET, and we'll be moving ahead with the exploration. Our main focus is now with exploration in majority of our own properties as well as the other properties also.
Okay, all right, Mr. Singh, we appreciate you joining in here on CNBC TV18. Explain to us how the demand-supply dynamics are playing out globally with regard to copper and your objectives as well for the company. We look forward to having you back on the show, sir. Post your Q2 numbers, then we can get the outlook for the second half of this fiscal and the path ahead as well. For the time being, the street will be happy about good times for copper prices. Well, for the time being, we'll slip into a short break. But on the other side, we'll connect with the management of Kaynes as the board has approved the redesignation of Mr. Ramesh, the MD, as the executive vice chairman. That conversation coming in on the other side of the break.
Welcome back. The market's managing to hold on to the green, 24,750 thereabouts. That's where we have reached on the Nifty. But we're going to keep it with corporate conversations for the next couple of minutes as well. The next company on our radar is Kaynes Technology. Now, the company has seen a few leadership changes in the last couple of days. CEO Rajesh Sharma resigned to pursue, quote-unquote, opportunities outside the organization. This is effective from the 31st of October. The board has redesignated Mr. Ramesh Kunikanan as the executive vice chairman for the residual term. He's part of the promoter group, the promoter family. Well, let's discuss this and, of course, the company's business outlook. We have Jairam Sampath, Chief Financial Officer at Kaynes, joining in. Mr. Sampath, always a pleasure to have you in. Of course, we keep talking business like we did last time as well. But first, let me just understand the organizational changes. I believe Mr. Muthukumar Narayanaswamy, he has been designated as the MD. I'm not quite sure who takes over the role of CEO. Is that post yet to be filled, or will it be Mr. Narayanaswamy? Basically, who's responsible for the day-to-day operations of the company? Can we just get some clarity on that?
For sure. Good morning to you all. So basically, as the company grows, we are just preparing for the next level. And we needed some more bandwidth at the senior management level and the holding company. So Mr. Muthukumar takes over as managing director. Basically, his focus will be in the areas of operational excellence and making sure that company functions, all the other processes work, and so on and so forth. Mr. Ramesh Kunikanan, who now takes over as executive vice chairman, he continues to look at all the subsidiaries and all the key customer interactions and all the new projects, etc. You will, of course, once we complete the exit formalities for Mr. Rajesh, you will see some more changes being announced, and they are likely to be, at this point in time, not at liberty to tell you, but certainly we are going to have some more changes, and there'll be a replacement CEO also coming in at an appropriate time.
So there will be a CEO announcement, you're saying, at an appropriate time.
Yeah.
Will this individual be an internal or an external candidate?
Wait and see. I think most probably we normally know the people before they take over the job. So obviously he'll be a known entity. And we'll come to you. Just give us a week's time.
Mr. Sampath, will you step up?
I'm glad Prashant asked that question. I was hesitating.
Possible.
So I just wanted to also tell you that, basically, this is all for augmenting the capacity within the organization. And also, we have now made big plans, we are now...
Sorry, I missed that. What the response I missed. Will you step up?
I am hardly the person to comment on that. This has to go through the various processes within the company.
Okay.
There would be a board meeting, and then there would be also other deliberations and so on.
Okay.
So, yes, of course, people like me are always available. That's not the issue here, irrespective of what we are designated as, or we are all long-term employees here. I've been here for about 15 years. And so lending a shoulder to some additional tasks is not a big problem. No, just wanted to clarify this entire thing. Basically, we are trying to augment the capacity at the senior level. So that the promoter, founder, and Mr. Ramesh Pandikanan, who has been spearheading all the expansion plans, is also having time to do all of those things rather than getting weighed down with operational activities, which is also very important.
Yeah.
So that's why this kind of changes. Of course, it's not related to Mr. Rajesh's exit, because Rajesh's exit came as a surprise. He's been here for about 4 years. But due to some personal reasons, he had to, and then we obviously couldn't prevail upon him to stay back. And as a large organization, what happens is that over time, there will be exits and there will be new entrants. And probably we are having more new entrants and fewer exits. Hope that trend continues, because we are likely to gun for this $2 billion by FY30. So beyond that, also the organization has to sustain its growth and profitability. So you will see some more appointments in the senior management cadre.
Okay.
Specifically looking at all the key aspects of our businesses. And as you know, all the subsidiaries and all the new businesses, they have their own independent CEOs, and they are autonomous and they are linked only to the corporate in terms of the value systems and any other.
So one thing I wanted to, Mr. Sampath, one thing I wanted to ask you specifically was this business of OSAT, right? For example, you tied up with Infineon, ANO. These are all sort of global firms in that sense. And when you are entering these kind of relationships, of course, they're entering partnerships with companies, but the person front-facing in that sense matters. So will there be a transition period? All this remains on track? I mean, no change at all? Because this was all announced recently in the first 4 days of September.
Yeah, so we do have some kind of a double or triple redundancies in our relationship management with the key partners, key customers, and key suppliers and so on. Typically, it's not one person who spearheads, but there'll be at least a group of 2 or 3 people. And that has been the case even in case of Semicon. So when we talk about Infineon, of course, Mr. Raghu Panikar is the guy who spearheads this entire activity. But then there are other people within the organization also who are familiar with the activities and commitments made and so on and so forth. And see, it's not just for the exit, but even sometimes temporarily for a few days, people are not available. So that point in time, we do lean upon the other people. So it's, let's say, concurrently operating people, about 2-3 people are generally involved in every relationship. Because the services industry, we have to be sure that customer is serviced nevertheless. So it's very important to have some redundancies within the organization. It does increase the cost a little bit, but in the growth phase like this, I think it's worthwhile having that, especially when we're expanding into newer territories and so on and so forth.
Mr. Sampath, exactly on that. I mean, growth, I think this is a good time for you to recap for all your shareholders, for the market overall, the current capital allocation policy and, how much you're planning in terms of capex or investments for each of the individual businesses, and whether that could be subject to any change as new leadership comes in. And in that, just give us some idea of the current cash in the company, because some have argued that cash flow from operations has been an issue. I'm not sure if you'll turn cash flow, in terms of cash flow from operations, whether it will be positive this year or not. You've done QIPs in the past. So just reiterate the current blueprint
Sure.
for investors.
Yeah. So I'll just answer it in no specific order, but fundamentally the capex allocation and the new projects, etc., have been done till about FY30. So we are not going to be coming to the market to raise any more funds as far as those projects are concerned. FY30, $2 billion, and that includes 3 different activities. Of course, one is already 2 new greenfield projects are in place already. One is the OSAT, and the other one is PC board. Both of the factories have come up, and sometime during this year, we will have commercial productions too. And they have also been adequately CapExed.
Can you give us the breakup, sir? I mean, over the next 5 years, up till FY30, just give us the breakup. How much will go in each of the businesses? You're saying you don't have to come to the market for raising any fresh equity.
I'll explain.
Yeah, and also the cash flow issue.
Yeah. I'm coming. Just to make sense of it, I have to give continuity. So fundamentally, no changes from our direction. Firstly, as far as the OSAT is concerned, we are doing about 3,400 crores of total capex, out of which broadly about 70% comes from government subsidies. Remaining we put up. And this year we have already spent about 200-300 odd crores. And this year we expect to perhaps add another 600-700 odd crores into the OSAT business, and that is FY26. And over the next 2 years, the remaining balance, that is 27 and 28, we will complete the balance capex so that we come to about 3,400 crores of capex. With that, our capacity in that particular business will be about 4,500 crores of sales, which we think that by the time we iron out all the capacity-related problems and everything else, so by FY30, we should probably hit that kind of a number, about 4,500 crores. That's as far as OSAT is concerned. As far as the PC board is concerned, total capex envisaged was about 1,400 crores, out of which we have spent about 200 odd crores in land and some building acquisition, etc. This year, we'll do about another similar number, about 600-700 odd crores. But next year, we'll complete the entire capex for this PC board. And PC board, when it's full-fledged, it will also give us a business about 2,500 odd crores.
Yeah. So, would this be subject to, trying to understand that some of these numbers, of course, we have from past interactions. My question really is, can these plans, would they be subject to change when the new CEO takes over?
No. Okay. So, obviously, these plans do not change. People do, of course, over time. And like I said, most of the people who probably will step into new roles would probably be very familiar. Unless familiarity is not of importance in that particular role.
Mr. Sampath, allow me to come in. Sorry, running out of time.
Yes.
Just a couple of things. So, are you hearing anything from the government on the new the PLI? The second,
which was the new ISM 2.0.
Yeah.
See, there was one residual approvals given for about I think 6 odd companies for fab, etc.
Yeah.
And some more works are on the anvil. For more basic level investments. I don't know the details, but certainly they will there maybe in a year or two, I think they will definitely launch, because they are very enthusiastic about the response they have got from the industry now. And most of us are ready to kind of ship out the chipsets now. So from that perspective, I think you can hear some more investment into this area. But this area actually...
Mr. Sampath, no, my point was, for you, for example, beyond F5, does this, the fact that they've confirmed there is going to be a 2.0 to this, does this give you visibility beyond F530 as well, right? It's some sort of...
So as far as we are concerned, whatever approvals we have got from the government, we have to make sure that that goes all guns blazing by about FY30. And maybe a couple of years before that, maybe FY28, we'll consider anything else, that needs to be done in any of these areas. As you know, both PC board and in the OSAT, the demand is, of course, quite good. And whatever capacities we have put is already kind of almost covered by all the customers that are already there.
Got it.
So there's a possibility by FY28, we might...
Depending on what scheme the government...
Cash. I also hope that we'll generate some cash within these two organizations themselves. To fund our portion of the capex, and of course, we look forward to government's help in whatever way we can to bring in new technologies and all that. I'll just briefly touch upon the cash flow question. By the end of this year, our cash flow woes in the EMS business will probably be past, and hopefully we'll get on to a positive operating cash flows by end of this year. And that also, there is a specific reason, for lack of time, I can't go into details, but it's all there in the public domain. So fundamentally, those also will address it during the next. That you would see a very healthy cash flow profile in EMS business. EMS will continue to invest about 200 to 300 crores.
Yes. Got that. We're out of time, Mr. Sampath. Would have loved to go on. But this OSAT comes on in December, right? 6 million chips a day.
Yeah, OSAT, this year we do on a, let's say, very modest target, about 100 crores or so this year.
Yeah.
And then, of course, next year onwards, it gets full-fledged with a couple of customers.
Got it.
So, yeah, you are there. Your ballpark is correct.
All right, we'll leave it there. Thank you very much, Mr. Sampath. Appreciate you joining us, and thank you for answering all those questions. We want to focus on Vascon Engineering. Stocks flying. Vivek is here to put the spotlight on it. Vivek, over to you.
Well, that's right. So the company has announced that it has signed a 5-year memorandum of understanding with Adani Infra. The company will now act as an execution partner under the early engagement model. So still details of the project, size of the opportunity as far as Vascon is still yet to be declared. What is Vascon saying? Vascon saying that they will be engaged from the design stage for the selected projects. And in fact, they say that 3 projects in Mumbai, totaling a little over 13 million square feet, have already been identified. Now, what they're saying is that the partnership is expected to contribute an additional 30% to Vascon's total turnover. So this is something that the street is actually being quite positive on. Remember, at the end of Q1 FY26, Vascon's order book stood at around 2,900 crore rupees. A positive development, no doubt, but details are still awaited.
Okay, all right, got it. Thank you very much for that. Let's quickly get to some technical trades now at 10 o'clock. Vinay Rajani is joining in. Vinay, good to have you in. So can you just, help us with, starting with the index, first of all, Nifty or Bank Nifty, would you have any trade?
Yeah, so Nifty has seen a correction of more than 800 points from the recent swing high of 25,448, and the recent, the Friday's low was 24,629. So the entire 800 points correction, if I were to see the moving averages, Nifty has reached below the 20 and 50 days moving average. So that's a negative sign. But yes, after 6 consecutive sessions fall, it might happen that we may see a pullback rally, and pullback can be up to 38.2% retracement of this entire 800 points fall. So 38.2% retracement comes in at 24,942. And if I were to see the 20 days EMA, that is placed at 24,970. So we can say that there is a cluster of resistances near 24,940 to 24,980 odd levels. So up to that, we can definitely expect some pullback rally, some relief rally after continuous fall. So yes, strong stocks can continue to do well. We may expect a pullback rally. We need to review it once that resistance line is crossed or not. 24,970 is a very strong resistance. Up to that, for the short term, at least for a couple of days, we can expect a recovery. And today's low should be the stop loss, which is around 24,668. That should be kept as a stop loss in trading long positions.
Yeah, the stocks, Vinay, what do you have?
Yeah, so HAL from the defense space looks good to me. Primary trend has been positive. It has been resilient in the downfall of the market, and it is looking good to us. So HAL, one can go long around 4,829. 4,770 should be the stop loss. On the upside, I'm expecting a target of 4,925. Second pick I would take from the NBFC space, that is L&T Finance, LTF. That this stock has been performing very well. It has seen a running correction and now seems to be resuming its trend. So 240 is the rate around which one can go long. 236 should be the trading stop loss. On the upside, I'm expecting a target of 246.
Okay, thank you very much, Vinay, for that. Appreciate your time. By the way, Atlanta Electricals, right? That is one of the few listings that we've had today, and there are a few. But this is a transformer company. It's been around for a while. Comes to the market now. Super listing. I think 13-14% pop, and now about 9% higher. So 822 competitors are like transformers, rectifiers, or some of the other larger ones like CG, etc. as well. But that is the new listing from the power transformer block. We'll take a quick commercial break here. Manisha comes on the other side for a chat on commodities. Stay with us.
Welcome back. Well, let's straight away get to the commodity market cues now. We have Manisha joining in. Manisha, it was all metals. It was gold, silver. By the end of the week, it was copper. What about this week? What should we watch out for? Well, gold and silver bringing that back yet again on your screens because we're looking at all-time highs yet again. Well, September, the month has been like that. It has been a string of all-time highs that the gold prices have seen. Should get it on your screen. $3,800 an ounce is now done. We started this year with $2,650. So you see where we are standing. And with those kind of gains, the percentage return clearly has been much on the higher side. For the Indian markets, it has been 1,15,000 rupees, 10 grams there. So very strong gains coming in for this one as well. 45% of gains is what gold prices have done in this year until now, and this has been the best yearly gain since 1979. It was in 1979 that we saw the gold prices give you a return of 120%. Since then, it hasn't seen a 45% or a 50% return come in on a year, and that's exactly what we are looking at in sense of gold prices here. So all-time highs in international markets, all-time highs in the Indian markets for gold prices today as well. Take a look at silver prices then, and we are trading above $46 an ounce onto this one. For the Indian markets, the all-time high is right now at 143,000 rupees a kg. So 1,46,000 rupees a kg is what we are trading in the Indian markets there. When you look at the percentage gain, well, we have seen 62% of gains in this year until now for the silver prices. And this is the best yearly gain that you have seen in 10 years come in for silver as well. So making records and making multi-year records, as you can see, for gold and silver, both of these. I want to touch upon silver slightly more because when you look at the gains here, it clearly seems to be doubling every few years. Then if you look at the 10 years ago, it was at 39,000 or 40,000 thereabouts. Last year, same time was 86,000. From 86,000 to 1,43,000 is what we are trading right now. And that's exactly where that 62% of gains jump in from. So last Diwali to this Diwali has been very, very strong in sense of prices there. This is what we've done in sense of returns. And as I was telling you, the best returns really in last 10 years is what silver has given you. It's given a couple of years where it has been negative, but not too negative as well. So after 17% of gains in last year, 60% up is what we are trading at this year as well. So very, very strong strength coming in there. Well, there are expectations of lower real rates that has been supportive. It is also about tightening physical availability when it comes to silver as well. Even at these higher prices, silver is trading at premium in various international markets there. Industrial demand has been climbing as well. It's above 700 million ounces at this point in time. Last year was a record high, and this year could be making yet another record high when it comes to silver demand. So the overall global demand is expected to exceed by 100 million ounces. That is going to be the deficit. That is what Silver Institute says. But Nomura believes that the deficit could be much higher at around 117 or 142 million ounces. So there are various reports all suggesting that the deficit for silver this year is going to be higher than 100 million ounces. Clearly supportive there. And then if you look at the outlook going forward, we're already done 46.5. 50 to 52 to 58 is the view now coming in from the global markets there. So bullishness in silver just about continues.
Okay, all right. Manisha, thank you very much for that. We'll take a quick commercial break. On the other side, it's our special segment, it's the economy. Lata discusses all issues concerning bonds and rupee with Kamakshya Trivedi of Goldman Sachs. Stay tuned. Conversation coming up.